Hey, what's up guys? It's Ezekiel Chiu here. So let me hit you with this. Most traders, they use the MACD wrong, right? They chase what? They chase every crossover, right? They get faked out by the fake signals and they wonder why their stop loss keeps getting hit. So the MACD, it doesn't actually lie. No, they just don't know how to read it, right? But here's the difference. When you use it the right way, the MACD, it actually stops lagging, right? It starts what? It starts leading you into some of the biggest moves out there, right? So this is not theory. This is the exact MACD strategy that I use to pull in six-figure trades, right? This is better tested. This is really precise. And this is an actual system, right? That is built for real results. So today, I'm breaking it down step by step so that you can finally trade the MACD like a pro, right? Stick with me because once you see this, you'll never look at MACD the same way again. Okay, so first thing first, the MACD, right, or the moving average convergence divergence. It's more than two lines that is crossing on your chart, right? It's at the bottom, right? Usually the MACD is at the bottom, right? At its core, it is a tool that is designed to track the relationship between moving averages. So what does this mean actually? So instead of just like staring at the candlestick or the bar charts, right? The MACD at the bottom, it gives you a different lens to look at the market itself. This is one that reveals the shift in the market that is happening beneath the surface of what you see in the candlesticks, right? So that's why traders around the world, yeah, even the big ones, even the fund managers, they rely on them, right? Because when you can see what is building underneath the surface, you're not trading late anymore, you're trading with the market's real rhythm, right? So that's why momentum structure is important. Think of it as the current beneath the surface, right? So price is just the wave at the top, right? But beneath it is the current beneath it, right? So the momentum is the force that is pushing that wave. Whether is it pushing it forward, whether is it pulling it back, right? So that's where the MACD becomes your momentum meter, right? So the histogram, the zero line, the divergence, right? All of it shows what is happening beneath the price, right? Before the price even moved itself, right? So together, they don't just tell you where the market is, they kind of hint at where it's about to go to. Okay, so now let's start first with the histogram, right? Or you can call it what? The heartbeat of the market. So here's how it goes, right? When the bars, it expand, the momentum is like racing, right? Bulls or bears, right? They are pressing it hard, right? So that's when it starts expanding. So when you notice that when the histogram does this, right? This means what? There's growing momentum and a sign to look for entries on that trend, whether is it bullish or bearish. All right, so now when the bars, they start shrinking, when they start getting smaller, it's like the heartbeat of the market, then slowing down. Right, so that is your what? That's your earliest clue that the strength, the momentum is fading, right? And maybe a reversal could be on the horizon, it could be coming next. All right, so now about the colors, right? The dark bars, right? It tells you what? That the expansion of the market is happening. And then the lighter bars, the lighter colors, they tells you what? That weakness is coming in. So those are really simple, but these are powerful insights into the market itself. Insights, okay? So now, you notice when the dark red bars, they start expanding at the start of a down move. So that's where the sellers are taking control. When the bars kind of lighten its color, it is the first sign that the push is running out of steam. Next, we got a zero line. right? So the zero line, that's what? That's the market's water line. All right, so above the zero line, that's where the buyers dominate the market. Below the zero line, that's where the sellers, it holds the market itself. Each crossover signals a real shift in trend and momentum, probably from an uptrend to a downtrend. Next, divergence, right? So divergence is like warning lights, right? So when price makes new highs, right, higher highs, but then the MACD, it forms what? Lower highs. This is what we call a bearish divergence. So this shows what? That the buyers, they are losing strength. Even though it's a higher high, the buyers are losing strength, right? And the uptrend may be weakening, or it could be ready to reverse. On the other hand, when price make lower lows, then the MACD, instead of forming lower lows, it forms higher lows. So that is a bullish divergence. The sellers, they are running out of steam and the buyers are about to step in. The clearest divergence, one that you can see super obvious, they are always the strongest. If you can spot it like instantly, like from afar, you can spot it right away, that is usually the one that is worth trading, the reversal. So there's nothing much to complicate it, right? So momentum structure lays out the foundation by showing you the three things. How strong that push really is. Which side is controlled, the buyers or the sellers? And when a hidden shift might actually be building and changing direction. Once you start reading all these signs together, you're no longer reacting to price. Oh, when this happens, I'm going to whatsoever. No. You are now anticipating the next move before most traders even see it. All right? So now, everybody talks about, okay, we got to spot the momentum. But the real money is made in how you enter, right? So that's where precision entries, they come in. Hey guys, Ezekiel Chiu here. So let's face it, scaling a funded account isn't easy, right? You got long evaluations, you got delayed payouts and strict rules that can even hold good traders back. And that's why funded trader markets have been standing out. They are giving traders more control, faster payouts and transparent terms. Their on-demand payout system is also a big win because most traders, they receive their funds within 2 hours of hitting the targets. And if it takes more than 24 hours, the payout is doubled, right? So on top of that, traders get 100% profit split. There's no hidden fees, there's no commissions, and you keep everything that you earn. So the platform is also built for flexibility, right? You're gonna find low spreads, 1:100 leverage, swap-free accounts, and access to trading platforms such as MT5, CTrader, MatchTrader, and TradeLocker. So if you trade crypto, you're gonna love the 24/7 market access with live chat support always available. So now, even with all these features, Funded Trader Markets remains as one of the most affordable funded programs out there. Check out Funded Trader Markets, links below. Precision. Entries are simply the two main ways the MACD helps you time your trade. The early trigger and the confirm trigger. So both of them works, right? But each one obviously has its pros and its cons and its trade-off. All right, so now first, the early trigger. So early trigger, how and what would trigger an early trigger? This is when the MACD cross over. All right, so now, when the MACD line, it crosses the signal line. So this happens, right? It often flips, this crossing before the moving average on the chart itself at the top, they do. Right, so this means what? If you enter on the MACD crossover, which usually happens earlier than the moving average on the chart itself happens, you can enter earlier. Right, you can get a better entry, you can have a better stop loss, right? You can catch more of the room if it actually crosses over, right? And the move is real. Obviously, the cons behind it or the trade-off behind it is what? There are more false signals. Take a look here. When I plotted the 12 and the 26 EMA, right, on the chart itself, right, and with the MACD as well, what stands out is how the EMA crossover at the top, right, they came in late. right? So if you entered over there, you would have a wider stop loss because price has already traveled further. So while the MACD crossover at the bottom is started earlier, so therefore your entry is earlier, you give you a tighter stop loss, you give you a better risk to reward ratio, right? A better entry spot as well, right? That lets you capture more of the move because you entered earlier. This proves what? How a small shift can completely change the size of the opportunity of this itself. Okay, while the MACD crossover, they often give you an early heads up, right? That the reversal might be coming. They also, like what I said, they throw out a lot of false signals along the way. So, which means what? Relying on them alone is risky, right? Because without another layer of confirmation that you stack on top of it, you are essentially gambling on all this noise rather than a proper structure. And then it comes the confirm trigger, right? So the zero line crossover, right? So because what? When the 12 EMA, it finally slips below the 26 EMA, the MACD itself, it drops under the zero line. So that single move, it's like the market, it's like telling you out loud, right? The market doesn't really hide things. Everybody kind of see it, right? That the momentum has now shifted from the buyers to the sellers itself. So when the 12 EMA, on the other hand, it crosses above, okay, the MACD moves over the zero line. This signals what? That the momentum has now shifted up as well. So now, in a strong trend, the MACD, it often pulls back to the zero line. Okay, so take note. If it's an uptrend, that pullback can be a good buying spot itself. All right. So now, once the MACD crosses above, back up, above the signal line, so that is a perfect spot for you to plan an entry. Obviously, with other signals, right? Candlestick, turns, etc. All right. So now, on the other hand, in a downtrend, when that happens, it becomes a good selling spot when it crosses below it. Cool. All right. So for precise pullback entries, if you want to learn more about pullbacks, watch my pullback video masterclass. So now let's move on. With MACD, precision is really what fits you best. So for example, do you like moving fast and taking a bit more risk? Or do you prefer to wait for confirmation and you trade with patience? So I mean, both has its pros and cons. It really depends on the kind of trader that you are. Both can win, right? As long as it matches your style. So precision alone doesn't guarantee consistency. That comes when you know how to stack the signals with real confirmation, right? And that's exactly what I'll go deeper into. So now, getting the right entry is good, right? But without confluence, it's a gamble. So that's why we have the confluence system. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. So you see this, even with the cleanest precision entries, the market always still have a way of taking you out, right? So that's the trap that most traders, they fall into, right? So they think what? They think that, oh, I just need one signal is enough. That's why a lot of traders, they watch a YouTube video, they learn one method, they go right in, they enter the trade, and then they realize, hey, it doesn't work that way. So don't just stop at,
okay, you learn a crossover, I'm going to go crossover. Oh, okay, I got a zero line. It shifts from a bottom to up, it crosses the zero line.
All right, no. We stack them up. These are layer and another layer. We stack it up, right? That's where confluence, it comes in, right? This is the point where the signals, it meets structure. The more confirmation that lines up, the higher your odds of success, right? Trading is not about guessing. Trading is about having an edge in the market. That's why we are not stopping at what? At just, okay, momentum or entries. we are moving right into real confluence. Here's what you can do. You can add what? Divergence with combination of the support and resistance, right? So this is where signal emits structure. So when these two, they line up, right, you got yourself a high probability setup. So what? So for example, when divergence tells you that the momentum is fading off, right? So when that fading momentum, it happens right at a key level, that's when the odds it goes right into your favor. Here's what you got to do first. You first identify the support and resistance level, the strong support and resistance level on the higher time frame, right? This is your first step. The higher the time frame, the more powerful the signal is. The higher time frame support and resistance levels are always really powerful, especially when price really respect it. Before that, price is likely to respect it now. All right, so now once you identify, you plotted the line, then we go to the lower time frame. So lower time frame, for example, when price reaches that level of resistance and it's making higher high, right? But in your MACD, it's showing bearish divergence at a very powerful rejection level. This is a perfect sell setup. Perfect. This is your high probability setup, whether is it to sell or to buy. Simple so far, right? So here's the trap. Most traders, they stop at just one confluence, right? I got this, ES together is confluence. One confluence. They think it's enough. And that's why they miss the real edge. Trading is not about one signal. It's about what? Stacking confirmations until the setup is so strong that gives you enough confidence. If every trade you take such a strong setup, you're gonna win, right? You're gonna win in the long run, right? So this is why we are moving now. I'm gonna show you the second confluence. So we talk about divergence with support and resistance, right? So now I'm going to show you the second one. Divergence plus Bollinger Bands. Right, so this is where it gets powerful. All you got to do, so Bollinger Bands, right? Bollinger Bands is indicator, correct? Set your Bollinger Bands, all right? I'm going to give you the settings now, to the period of 200 period. Right, standard deviation, you put it as 2. Right, number 2. This is a simple setup, but it's going to have a big difference. When price pushes too far outside the bands, it means what? The market is stretched and the market is vulnerable. When price goes out outside the bands, it's always got to come back into the band. So this is your setting, the 200. That is your first clue. Okay, we're going to add on. Then we add divergence. And then now you got confirmation. So this combination is like you catching the market red-handed. That when market is going up, outside, you go outside the band, right? Price is getting tired already. The momentum is also fading, right? Why? Because there's divergence, right? And the setup is screaming for a snapback to go back inside the bands. It always happens like that. So the market is exhausted, right? And then it's giving you proof. So that's where the traders step in with confidence itself. Here's the thing. The MACD on its own, it will give you signal. But MACD, when stacked with confluence, that's where the real high probability trade, they cannot show up. The difference is night and day. So signals are noise. The other is confluence. It's confidence. That's why you stack it all together. So how can you put it all together? Let's do a recap. Let's bring it all together. We start off with momentum, right? The MACD gives you the momentum, right? The histogram, the zero line, the divergence, right? This is the foundation of the MACD. They tell you when the first change happens, right? Then we move into precision, right? Precision entries, how you enter early versus a confirm. Both has pros and cons. But one has the ability to keep your stop loss tight, one has the ability to better entries. But hey, we don't just enter early based on one signal alone. We add in confluence. We add in what? The MACD with zones, with the Bollinger Bands, right? And who says confluence 1 cannot combine confluence 2? So for example, you got MACD divergence, and then you hit the higher time frame support or resistance level. And then you add the Bollinger Band when it comes back down into it. And then you stack the MACD zero line crossover plus the zero line breakdown plus the MACD crossover. Whew. This will give you an amazing setup. Not every setup is going to be like this, but when you start stacking confluence together, you're going to have a super high probability trade. Take these kind of trades every single time, you are going to be a consistently profitable trader. Good? Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.